This is the Texas Land Guys podcast, hosted by brothers Tim Dosh and Tom Dosh. With their partners David Marshall and Tripp Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Welcome to the Texas Land Guys podcast. So this is the second part of our two-part episode with Tim Dosh and Tripp Rich, where we talked about the land trends and storylines of 2025 and 2026. We're going to get into more predictions. We did hit some predictions in part one, but into more predictions in this second part. So we'll go ahead and listen to what we talked about here. Another storyline that we really haven't hit, and I'm interested, Tripp, if this was a storyline in Central Texas. I know it was for Tim and I in our markets, but industrial ended up being the strongest asset type for us in Dallas this year. And I say Dallas, DFW. And Tim, I think you said before we were recording, it's the same for Houston. It was just consistently, we saw like pretty average, decent multifamily activity. It was just hard to get deals capitalized. Single family was the biggest change. Like we saw a really, really hot single family market turn like 180 degrees, probably Q2 of 2025, just because we had so much supply and then sales started to slow down on the homes. But then on the industrial side, we took out, I think it was 5 or 6 industrial listings all in like Q3, Q4, and found buyers and have multiple offers for every single one of them. There's no other product type that we've gone 100% this year, taking out a listing and within a short period of time had that much interest. And actually, crazy enough, all of those, we exceeded our BOV values. We always, when we do a BOV and provide an opinion of value, we always give a range, because land is just, you can't just be like, it's worth 10 million. I mean, it's always going to be a range, and you always get a wide range of offers. But all of the industrial sites resulted in above the high end of our range, which blew my mind, because it's just, and each one of them was like, well, are we being a little aggressive on this one? Because like we had such good success on the last one, but is this site is good? And then developers showed up because the demand's there, and there's a lot of capital for industrial sites right now. So that was an interesting storyline, because I think going into the year, I knew industrial would be good in DFW. I didn't think it'd be the strongest asset type in DFW.
Yeah, I mean, Austin, completely different story. It was really hot for the past few years, but historically, Austin hasn't really been that big of an industrial market. And then in 2020, 2021, 2022, especially with COVID, we saw a boom, and our supply, grew astronomically. And, while it was great for a really long time, I think they're about to experience what we've been experiencing in multifamily for the past few years, and until I had lunch with a client just 2 days ago, and they got like 3 or 4 different leases done and went from 17% occupancy to 52 in like a month window, which is pretty incredible. For the most part, we have so much supply coming, and tenants are being very selective and picky, and a lot of these big projects that made a lot of sense a few years ago have delivered and are having a really hard time getting really big tenants, but it continues to look like a flight to quality. We've seen the urban infill, smaller stuff be really active, specifically like shallow bay flex product that's close into the city do really well. And then the other, caveat to speaking on industrial is iOS has been incredibly hot in Austin. I'd say we've made more iOS offers this year than we have any other product type.
I know last year you mentioned that similar, dynamics on the industrial side, but you mentioned that there are some pockets, I think you said like 35, and some deals you were invested in that were doing pretty well. Are those deals still doing well, or is there just a lot of new supply that's continued to hit that was, already under construction?
The smaller, well-located ones are performing pretty well, and then we've started to see tenant demand pick up on particular projects that are closer to Austin on 35 South. But for the most part, I mean, it's been really slow and tough for the industrial guys. But the other issue is the guys that have industrial sites they're trying to get capitalized down there are having a really hard time. And I think that speaks to the slowdown in demand and like vacancy rates being pretty low.
Yeah.
Or I'm sorry, pretty high.
Pretty high.
Yeah.
What do you think the drive in iOS is, just knowing that like Houston and Dallas had a lot of that, and maybe Austin hadn't had as much, or maybe you guys had, and then there just was more demand?
That's such a great question. And I wish I knew the actual answer. My thoughts are that a lot of these iOS deals are older, smaller crappier sites that you drive by all the time and you're just like, oh, what's that junk? But so many of these people, built these for their own business, and it's a, owner occupied deal they've owned for 10 or 15 or 20 years. And I think a lot of these, groups that are coming in to buy these and kind of do a value add or get in a new tenant and then turn around and flip it. I think a lot of those, tenants are coming from construction jobs that we continue to see, and they're also kind of feeding into like the Teslas and the Samsungs of the world. But man, it's a great question, and I wish I had a better answer, but it's just crazy how hot the products become. Can't speak to the tenants directly as much as I can capital interest, because it's such a attractive product. It's very easy to turn around. But we have a client that we're working with right now across Austin and San Antonio, and they're basically putting all these projects together and pooling them. And I think they're selling to Blackstone for like a massive number that I can't say, unfortunately.
Yeah.
But they're basically pulling all these projects together, and it's the Blackstones of the world that are coming in and buying these huge portfolios. And the product's not attractive, but it's really good yield, really low risk. There's not a lot of, you don't have to go develop. You don't have to go raise a lot of equity. A lot of these projects are pretty small.
Tim, what about you in Houston?
Yeah, I mean, for industrial, we saw a really strong year. I think land prices probably doubled through the year. We saw some record land pricing, and maybe even in some cases more than doubled. And we talked, I think, at the beginning of the year how the challenge we're starting to have in Houston is the really good sites, the good pockets where developers want to be are getting really picked over. And I would say after this year, we're even more in that place. So, most of the good Beltway locations and kind of the near Northwest locations are pretty much spoken for and developed. There are some current deals happening that are probably the last deals get developed there. And it'll be hard to manufacture sites going forward just because they're very fragmented, small sites that are left. And so we're starting to see the Grand Parkway, a lot of activity on the Grand Parkway. Certain parts of the Grand Parkway are pretty hot, especially the Northwest part of the Grand Parkway. And I think we'll continue to see that growth going to this year. And, places on the Beltway that were not in favor, that were kind of the fringy Beltway locations like the East Belt, seeing those continue to fill in and more activity in those pockets. But it's been everything from, smaller sites. We've seen developers get aggressive on smaller deals, all the way up to the really big deals. Some of the largest deals we've seen at some big dollar numbers have gone under contract this year. So I think it's going to be another good year for industrial. Our fundamentals are strong right now in Houston, and it just seems to be one of the brighter spots for Houston across all the asset types.
Yeah, I mean, we have a lot of developers up here in Dallas that are talking to him about wanting to be in Houston because the fundamentals have been so good.
Yeah.
But I think you mentioned it earlier. There's just a lack of good development sites too, which is always a challenge. And, that's when you find them, I think that's where you're seeing land prices doubling. That's kind of what we've seen too, is like really strong land pricing because there's just not a lot of like good, and I say good, like well located and large enough. Because there's been a lot of demand on the smaller shallow bay product, but most of the developers we work with love building the bigger projects. They're just, better fees, more scale, more institutional. And so when those sites become available, there's, almost like a feeding frenzy on those.
Yeah, that's how it was for us back in like 2021, 22. But so many of those big projects, haven't broken ground due to utility, like still waiting on utilities today. And then the bigger projects that have delivered, while we have seen, some pretty decent lease-up activity, there's, multiple million square foot phases that they still have to build. And, I think they're sitting there going like, man, we should probably wait a little bit because we have so much supply in the pipeline. I think it'll take a while for us to lease up what we currently have. And then as buildings continue to deliver, it's going to be really interesting to see what happens with rents on the industrial product.
Yeah.
But overall, I think Austin long-term makes a lot of sense. We're in Central Texas.
Yeah.
So
I think it's just a function, like you said, of the existing market size, and then how much was developed. It's just going to take time. But then once that does absorb, and once that foundation is there and the market's that much larger, it's going to be great for Austin. It's just hard as a developer in the current environment with so much supply.
Yeah, absolutely. It just didn't make a ton of sense to build the really big projects right now. We have a lot of guys that are looking for like acquisitions, value add deals, things of that nature. Just because it has income today and it's a lot less equity check on the front end.
Yeah.
Yeah.
was talking to a client the other day about industrial here in DFW, and it was interesting because we talked last year about more demand on these bigger projects, bigger bomber projects. I think David Marshall, one of his predictions for Houston was more of these big bombers. And when we say bombers, million square foot industrial buildings. And this developer was saying in DFW, we're down now to, I think there's only 3 million square footers left available in the market, and 2 of them are about to get locked up.
That's incredible.
There's like a Fortune 10
Wow.
company that's signing one of them up. So there's going to be like 1 left. And markets like South Dallas that have been completely out of favor because it was like it's way oversupplied. It's going to be a long time before anybody goes back to South Dallas. Now there's demand again to look in South Dallas. And in the same things happening in the 500,000 square feet buildings. So kind of the still really large buildings, but not quite, the huge monster buildings. There's like almost none of them. They're all getting leased up. So there's really good absorption, especially towards the end of the year. And so we had gone through a pretty long period here or I say long period, a couple of years, feels like a long time, but we had gone through a couple of years of not really seeing the big deals and a ton of small deals like you guys were talking about. I mean, we did a deal a couple of years ago. There was like 3 acres, a development deal because it was super infill. And they were just like, we got to do a project, and it was a cool site, but they paid a ton of money for this little 3-acre site. But that's how aggressive some of the like bigger developers were getting. We had our big institutional guys going down doing like 5-acre sites, which,
Wow.
Used to be like, well, we won't look at anything under 20 or 30 or whatever. But now with what we're seeing and just the lack of inventory, there's a lot more aggressiveness around going further out because you kind of have to go further out. You can't go find a 1 million square foot land site. I mean, there's a reason. If there's a site that's like that, it probably means that the seller's just not, or the owner's just not going to sell if it's like urban. And so you have markets like Denton and you have markets like McKinney. McKinney was the biggest growth market in DFW from an industrial standpoint this year. And Tim, we saw the same thing. I don't know if it was exactly 12 months ago, if it was 18 months ago, but there was deals selling near the McKinney airport at $6 a square foot, $7 a square foot. Fast forward, and you have REITs coming in and buying development sites at 15 a square foot.
Yeah,
And, I mean,
that's
just
incredible.
incredible growth. And now that's like the going rate, is everyone's asking now double digits per square foot. And there's so much momentum with the airport and just everything happening. And so that's been a big focus. But we have the same challenge here. It's really difficult to find well-located, good industrial sites. And so there's a couple pockets that are getting a lot of activity. And then there's a lot of areas where it's really hard. Guys are buying old office buildings and trying to convert them, doing some really creative stuff. And then in other cases, some of these cities are holding on to like vacant office and won't rezone it to industrial. And it like blows your mind because you're like, man, this is tax revenue. So it's hard just to get well-located industrial built. So that's helping just drive, the interest. And so there's a ton of demand right now on the industrial side.
I think you could kind of extrapolate that to the whole market with all these uses. They're the good sites in the right areas. We're seeing really strong demand for single family, for multifamily, for industrial. And there's a limited number of sites in the right areas where those deals can get done. And so I think people sometimes think of land in like a really general sense, that there's not these big differences in value and pricing. But sometimes, like especially in Dallas or Austin, where they're zoning, the same market could have very different prices based on land use, what you can do with the site. And then when you look at a market like Houston, there's a huge difference in what an industrial or a multifamily or a single family guy can pay based on very specific things about different sites, which submarket they're in, where they're located in that submarket, the size, just a lot of these different factors that make land very unique and not just some kind of general thing where you think about like the leasing space or the investment sales space where you could generally say this square foot price in this market or this investment sales cap rate in this market is kind of the going rate. It's really hard to say that about land.
Yeah, it's such a great point. I mean, Tim, you were talking earlier about a site that you're working on at $30 a square foot for multifamily in the suburbs. But then I'm sure you could list off several multifamily sites in other suburbs that are like pretty good sites at $7 or $10 a foot. And those landowners, a lot of times, they're going to hear about the $30 comp in a different market and think, well, that's what multifamily is going for. Like that's what people can pay for land. And that's not obviously not how it works. And that's not even just a function of the rents. It's a function of just the availability. Because I think that site you're talking about, there's like barriers to entry. And so barriers to
Well,
entry drive value too.
yeah, I think this market is even more like that. I think that's always true with land, but like what we're seeing in multifamily right now is these kind of B sites or commodity sites are not in favor anymore. And developers, there's not as many deals happening. And developers want the really good, like the best site, the A+ site in the market. That's what can get capitalized. So we're actually seeing developers pay significantly more to do those sites and not even want to offer on the sites. They're the weaker sites. So the example that I'm giving you, there's sites that are within a mile or maybe 2 miles of the site I'm talking about that even at $7 or $8, we wouldn't probably get interest or couldn't get capitalized because they're not considered good sites or more commodity sites in the market. They're not in favor in the current market. And so developers will go pile in and compete for the best site. And I think you're right. An owner might say, well, man, that site sold for $30 a foot. Mine should be worth, at least worth $15 a foot, or $20 a foot. And you're talking about two completely different deals. You can't even really compare them, even though they're somewhat close to each other.
Yeah, I mean, to give a sense for just another storyline that we're seeing here in Dallas, to give a sense for how active the demand is for some of these uses on good sites. We had a listing in Plano, and we had a REIT that offered on it that I didn't even know was developing in Texas because they hadn't been developing in Texas for like at least a decade. They had said like, we're just going to be either coast. And now they're back wanting to do deals in Dallas. And we had 15 offers in 2 weeks on this site and hard money day one. I mean, that's not how most of our listings are going on the multifamily side because it's so hard to make deals pencil right now. But this was a really good site and there was so much demand. And, it's one of those where when one of the groups got selected and then we were getting just beat up by every client that didn't get the listing, thinking that, their arguments like, well, we're the only ones that are doing deals right now. We're the only ones that are active. And it's like, the reality is for good sites. And that's what I had to explain to them. I was like, it was like we had as many offers as we wanted and as many terms. And the quality of the group showing up was like the best of the best. And so to your point, Tim, they're all there for these really good sites. Now, if I go take them a site that is just like out in one of these markets with a lot of supply and the rents are soft, every single group will just pass on it.
Yep.
It's like there's no interest. So it goes from like no interest to incredible interest.
Yeah. I think it speaks to what we talked about earlier. It's a complete flight to quality.
Yeah.
With equity being so picky these days, I think we're going to continue to see flight to quality, and it's all submarket dependent. We're still having activity across all product types depending on the submarket. Like industrial, even though we have a ton of supply, all the big local guys and, even national guys will come in and do an incredibly located, cheaper, flat site for industrial that they can get time on. But, they want to have a story. But I think we're going to continue to see flight to quality across all product types.
Well, heading into, this year, as we get into it, we always meet with a lot of clients to kick the year off. And that always starts even at the tail end of the year before. And so what are some of the things that you guys are hearing from clients in meetings about their approach in 2026? Just from a development standpoint, it could be any use type, but the way they're looking at it, how aggressive they want to be, just how they think the year is going to play out.
I think, for Houston, there's a lot of optimism, which we always get kind of a head fake, I think, in January, February timeframe. And we never know if it's going to continue throughout the year, but everybody starts the year fired up. Everybody has all these goals. And like you said, Tom, we need this many sites. We need this many of this type of deal, this many of that type of deal. I would really separate the market into the groups we would call tier one, like the real players who have a high level of confidence they can execute if it's the right kind of deal. And then there's the tier two groups that may or may not get deals done, and they're going to have a hard time capitalizing deals. Everybody in these meetings wants to do deals and says they're going to do deals and wants to be aggressive. I think there's a realization that deals have to really actually make sense. No one's just going to go type a lot of stuff and get lucky and it's going to get capitalized because the market's going to save them. People realize there have to be rents to support the product. They have to be really good sites with the actual story. They have to be the right type of product. If it's multifamily, it has to be a product that fits, that submarket, and construction costs make sense for the kind of rents you're going to get. And same thing for industrial and single family. They have to be the right pricing, right located sites in the right submarkets.
That makes me think, Tim, of a conversation I had the other day with a group that kind of a recently formed development group that's under this massive umbrella, several $billion umbrella, discretionary capital. They can go fund projects very quickly. And their strategy is really less interested in just raw land, and they really are interested in projects, meaning sites that are developer controlled with plans, just knowing that it's going to be so hard for most of the market to get out of the ground on deals. So it's like, instead of like, let's go look at the new growth market, or let's go call on some like office building, try to tear it down and try to zone it and all that. They're like, we want to go do deals that other developers just can't do. And we're seeing this a lot, of willingness to do like a co-GP structure, willingness to partner up on a deal. And I think that strategy makes so much sense. And that's obviously an area where we excel, because we track supply so closely. We know all the developers. So many of the deals we've been working on have been for other developers, helping a developer sell. And even in a difficult market, some of them we've helped a developer get out of a deal and make a nice pop, which is a pretty big achievement in the current market. If you bought in 21 and we helped you get a pop, but we have. And so we're getting those calls and those meetings because they know that we know that the guy that's never going to say that he's willing to sell, like we know that he's willing to sell or willing to do a specific type of deal. But I love that strategy for a group that actually has the capital where they can come in and solve that problem. Because the whole problem right now is equity to get these deals going. And so a lot of the deals we've seen get done, they have been closed prior to construction, which is kind of crazy, but it's been private capital. It's taken deals down, and then they've had to finish out the permits to get to construction. And then in some cases, like we've closed a handful of deals with Carlisle. And so those deals, they close into construction, and they, it's an alliance type of deal. And so they set that up, and it's so hard though to thread the needle on those right now. Still hard to get landowners to give time. But I think that is a lot of capital on the sidelines that's just been waiting for deals to make sense. And the whole question is, will they come in and start doing deals before it does get too competitive and it's too late? Because we're still having conversations with guys where they're like, it's still yellow. It's not green yet, but it's not red, but we want to be early. So make sure to call us. And I'm like, well, you need to go now if you want to be early, because there's already deals happening. I mean, we're still making a lot of offers. It's hard, but you kind of have to get in the game and start pursuing stuff. You can't keep waiting.
Yeah. If you're not in the game right now, it's like, when are you going to get in the game? I mean, I don't know that. I think maybe people are thinking it's going to be this boom bust cycle, that we've had my whole career, where things are, they're off or they're on, capital and developers are trying to be in at the right time when things are on. I kind of feel like the rest of this decade could be like the way the 90s was, where you don't see a very frothy market, but you don't see a bad market. You see deals getting done that make sense, but they have to actually, be real deals. You don't see people just coming in and overpaying, and a lot of dumb money out there that are saving people on deals that don't make sense. And so that kind of mentality of it's yellow and maybe not green yet and all that, it's like the truth is there's deals that are green right now, which I think is what you're saying, Tom. The right deals are green. You're smart if you go do the right deals. There's certain deals that you shouldn't do right now because it's not the right time of the market. They're not priced right. The market's not going to receive them well. But I would be concerned if I was just on the sidelines. I think that's not smart.
Yeah. And I think another big point with that, and just something that we talk to our clients about a lot. And I was talking to a client yesterday about this, because it's all private capital, very wealthy founder. So he can do whatever he wants. I mean, he wants to make money. He wants to make a lot of money on his investments, but like he has the flexibility where he can just stroke checks and do stuff. And his development guy was like, I mean, we could close on it tonight. And I believe him. They could. We haven't even offered, but we could close on it tonight. But for him, he's starting to realize you're just not going to see land go, and get reduced like in a third. It's just not going to happen. And if you want to be in the type of sites that you believe there's going to be a good outcome in the future, like you're going to have to pay up for it. And that's where, going back and listening to what we talked about last year and our predictions for this year, we had some pretty bold statements. Like, we think that we're going to see some pricing come back in Houston and Dallas at like 21 and 22 levels. That was said last year. And we actually have. Like, we closed a deal last month, 2 deals last month at the very end of 2025, where one was a phase 2 and the price was 30% higher than phase 1, which was bought in 2023. And the other one, it wasn't a phase 2, it's just a standalone deal, but it was the highest price that actually closed in that submarket. So there's all, since that submarket's been around. So
it's pretty incredible.
It's crazy, but it goes back to the best site in those 2 submarkets. I mean, hands down, those were the best sites. And the one developer that paid the highest price that's been paid, they're just going to sit on it for a year. But they're like, they had an opportunity to buy it. They bought it from another developer. It was a really unique situation to even just get to buy the site. So they're like, we're going to take the risk and we're going to close on it. It's private capital and we'll sit on it for a year. And to your point, Tim, if you don't get in the game, a lot of developers will miss that chance. Go call the guy back in a year, and the seller that was a seller, they're not a seller. They're building it themselves, and you miss the opportunity to buy the site. So a lot of times it's more about go buy the very best sites and pay up for those sites. Don't be waiting for what's not going to happen, which is all the very best sites get discounted by 50%, because it just doesn't happen. It could happen on a one-off basis, but it doesn't happen overall.
It's amazing how resilient the good sites are, and also just the disparity between the bad sites or the kind of mediocre sites and the good sites. I don't think people realize, I mean, we hardly ever see the really good sites even get discounted. I mean, maybe they don't trade right away, but as soon as there's capital available in the market, they trade and they trade it. It seems like the price just keeps going up on a lot of these, to your point about, pricing versus, now versus, what we saw in 21 and 22, which was the last high watermark. Back in 25, we saw, even in Houston, some incredible pricing on sites, higher than we've ever seen before in some of these suburban markets. And at the same time, you have other sites where the price has been going down, in the last 3 years, and probably will either keep going down or will just stay down, not recover. So I think that point of figuring out how do you get the really good sites done and not be waiting, thinking you're going to see, some buying opportunity that will probably never come. And I can't tell you how many developers we've seen who are some of the really smart developers. I won't mention any names here, but you can probably think of some that you talk to them and they're always waiting for things to come down. It's like, oh, the numbers don't make sense on these sites. This isn't real. The numbers are going to come down. There's going to be blood in the water. And then I'll jump in. And it never happens. I mean, it happens on the bad sites, but it doesn't happen on the good sites. And so I think the very successful developers are always trying to do deals, and they're always focused on the right sites, and they end up being the most successful long-term because of that.
Yeah, it's hard to be a developer if you don't develop, but we've definitely seen that. There's I can think of some that for 10 years they haven't done anything because they've been waiting for a good market to go bad or a bad market to get worse. It's like it's never quite bad enough. So thinking again just about some predictions for this year and what we expect to see. What do you guys are seeing on the timing side? Because I think that's another interesting thing about land deals. There's what we see in the moment, which is a lot of like what's going under contract. What are people offering on? Which is all looking forward a lot of times to at least 12 months from now when those closings on average happen or when those deals really happen. And so sometimes you'll have this like quarter of a lot of activity. So in 2025, the first quarter, tons of activity of just offers, contracts. But because most of those deals didn't close, it was really just a false start like we've talked about. And it was just activity. But what do you guys expect to see on the timing side of maybe where people will be offering, but then what's realistic as to what will get agreed to and the type of timing that will result in closings in 2026?
Yeah, I mean, I'll speak for Central Texas. This last quarter, it's picked up significantly. I've been getting 3 to 5 calls a week from multifamily developer clients that haven't offered on sites in Austin in like multiple years, saying, hey, we want to rebuild our pipeline. Starts falling off a cliff. It's still early. Construction costs are still relatively high. Rents aren't great. But if you look into 27, 8, and 9, you're going to be delivering in the hot air. Yeah. So it's like a perfect time to go start acquiring sites. But throughout this entire market, we've seen land come down, call it 10 to 15% when it probably should have been like 50%. But the biggest change that we've seen is time. We're seeing land sellers react finally and giving time again on deals. And Austin's very difficult to develop in, and it, takes a lot of time. So, I mean, we're seeing 12 to 18 to even 24 months on contract timelines, which is probably where we should have never left. And a lot of these guys are going back to, hey, I need to close with like SDP in hand, and all of them are saying I have to have equity in tow, to be able to go and do the deal. And so that's the biggest shift we've seen. I think that timeline will compress on like really good sites or entitled sites or like sites that have plans. Those are kind of anomalies for the ones that are ready to go. And the smart guys are acquiring deals that, we had already sold once, from developers because they have a full set of CDs and they can go break ground tomorrow. And those guys are probably going to crush it. And those are, A+ sites, and they're going to deliver into a time where there's no supply hitting.
Yeah. Are you seeing sellers willing to give that time too? Because that's what's pretty amazing.
Yeah, yeah. And
Developers will always ask for what they can get.
yeah, that's been the biggest shift. It hasn't been the land price. It's been
Yeah.
sellers giving more time again, which obviously we don't love as land brokers, but
Mhm.
it allows to get the deal done. And how difficult it is in Austin. These guys actually need that much time. I mean,
Yeah.
entitlements are really tough.
Well, it's painful at the beginning of the time period, but then 12 months actually goes by really fast. And I think
Absolutely.
what's unfortunate is like how many deals have we gone back and forth for 3 months, 6 months, 12 months
Oh,
with an
yeah.
owner over like 2 months on a contract or 3 months on a contract. And then you're like, we've
Mhm.
been going back and forth on this longer than the amount of time we were requesting and we never started. It's funny. I had this conversation 2 days ago with some landowners. I made an offer on their property back in 2021 with a mixed use developer and they didn't do anything. Then they took it to market. Then they fired that broker. Now they hired a new broker, made them a really aggressive offer the other day. And it's a really complicated mixed use site that has to be rezoned. And they're like, we just don't want to give 4 months of due diligence for you to meet with the city. And, and they've owned it for like 50 years, but it's like, so you've been trying to sell it for like 5 years. You fire multiple brokers and you won't give somebody 4 months. Like who's going to show up that suddenly just closes on it, faster than that. But it's good to hear that sellers in Austin, or some of them,
Some of
are
them, yeah.
understanding, like, if I give the time, the odds of this deal happening go up significantly, especially if you pick the right group.
Absolutely.
Obviously, if
Yeah.
you pick the wrong group, which we can help with that, to Tim's point about who's tier one, who's tier two. Everyone is not equal when it comes to, can they really raise capital? Can they
Mhm.
really get capital committed? Can they solve problems? And are they spending money? What's really frustrating on some of these deals is, yes, it's hard to get equity, but some developers, they'll tie a site up for 6 months, never do a survey, never do a geotech. This just happened on another deal.
Yeah, they're just
Didn't
trying to
do
get equity.
anything.
Yeah, they're just trying to get money.
Then they drop it, and then the owner takes that out on the next group,
Mhm.
who's normally a group I'm representing that's willing to spend money. And it's funny, we had a conversation the other day and with the owner, and we're like, can you share any of the due diligence from the previous group? It would help us try to meet your timeline. And he's like, well, they didn't do any due diligence.
Yeah,
It's like,
it's
well,
awful.
we'll commit to doing that and we'll commit to sharing it and just helping landowners get educated around that. And so it's hard. I mean, a lot of developers get frustrated with us that we can't educate a landowner enough, but some of these landowners are really difficult
Yeah.
to get to understand just the reality of what's going on. And sometimes it's not always positive in the market.
Yeah, I'd say in Houston, we're not seeing as much of an issue with landowners giving time. I think maybe a couple of years ago that was a bigger issue, but I think the landowners have gotten so beat up now that if it's like I think like Tripp said, if the pricing is good, they tend to give time. And we're seeing on the multifamily side, I just had a site that we got 3 offers on from multifamily developers. They were all competitive offers, and every single one of them was a 330-day total time, which I thought was kind of funny. But we're seeing probably 9 to 12 months, pretty standard for multifamily. And then, single family and industrial is also pretty long. It kind of depends on the deal. Where we've actually seen quick timing, surprisingly, is on these infill sites. We sold 7 or 8 deals last year in 2025. They were infill that were fast deals, like anywhere from a 60-day deal, maybe a 120-day deal, all in timing. And some of that was user base deals where we had an end user that was buying the site. And some of them were just developers who had capital and there was enough of a discount on the land that they just got aggressive and went quick and bought it. So that's kind of unusual. I think a normal development deal in the infill market, we still see people ask for a lot of time, but we have seen some quicker time deals with those.
Yeah, that's good. I mean, I think in Dallas, it still feels like time is coming up on a lot of these conversations where we have quality developers and they're just saying, to your point, Tim, I think it realistically is taking 9 to 12 months unless the deal has plans. And a lot of sellers are trying to be at like 6 months. And it's just like that is so tight to make a 6-month deal work if
Yeah.
it doesn't have plans. Because you do have to go through due diligence before you can start on the plans, and you're just not going to have them done in 3 months. And it just puts a lot of pressure on developers. And there's so few developers right now that want to take land down. I mean, like I said earlier, that's kind of been what we've closed. Have been a lot of deals where they've been willing to, but it's just a tiny percentage of the market that can actually do it or is willing to do it on
Right.
these deals. On the single family side, Tripp, last year you talked about how hot San Antonio was. Has that stayed the case? Like, has Austin come back, or how would you look at the single family between those two markets?
Yeah, it's a good question. San Antonio is still stayed pretty active. Zach's doing an incredible job. We're still seeing a lot of activity on the single family front there. I think it's just a lot more affordable. It's a different demographic down there. And so I think we'll continue to see strong interest there and continue to put deals under contract. Austin, the guys have gotten a lot more picky, the developers, the builders. We're doing a lot of like large transactions, but these deals take 3 to 10 years to build out. And so I think they're looking at it long term. And while I think we have an oversupply on single family today, I think looking out into the future, since all of these guys dropped all the big builders dropped their contracts earlier this year, I think they're going to keep wanting to backfill their pipeline. So I think in the latter half of 26, we'll see a lot more activity on the single family front. And then even in the interim, those guys are still interested in doing deals, but they're being very selective. It's a lot more of the 50 to 200 acre tracts, or more like infill townhome development. I think will be a huge growth point in 26. There's not really a lot of people doing it, and there's such a demand for Austin. And we just got townhome zoning, I think, in the past 18 months, which is crazy to think about. Yeah, overall, I think, Austin will be a relatively healthy market long term, since people are constantly moving here and want to live there. But we definitely have some, going back to like being sub-market dependent, some sub-markets are doing pretty poorly right now in the single family exits and the sales. But other markets like Georgetown on our Avery deal, incredible location, great schools. We ended up getting that transaction done, but ultimately we did give them the time and they were able to succeed. But I think same thing for the other product types. It's going to be flight to quality. Good schools where people want to live and where like builders can get time.
Well, it's interesting because as you're talking about that with single family shutting off to a degree, like you're talking about groups dropping sites, that in Austin, with how challenging it is to develop and all the things you have to overcome, utilities you have to solve and environmental you have to solve, that will create, like this big ramp back up where there's going to be tons of demand again. Because I think it's easier maybe in like a DFW to just go buy land, because it's more flat here. We don't have quite the same environmental and all that. So like if you need to ramp it back up, you could do it more quickly. And Austin, I think that's going to create a rush again. It's just when it does.
Yeah, it's really interesting. I think a lot of those guys that were dropping it, they're all publicly traded, and so they have to meet, shareholder demand, even though they have billions of dollars on their balance sheet, and they should just, keep those deals. And then on the other hand, you have the private guys that have money. Specifically, we have a lot of investors that are, overseas, and they want like 1,000, 2,000 acre tracts where they can go and create a mud and create a lot of value and sell off pods and give builders time. And so I think we're going to continue to see that. I have, 2 specifically that are looking for 1,000 acre minimum tracts right now to do master plans, because they see it long term, and these deals take 5 to 10 years to build out depending on the size. But I think it's, again, flight to quality, and then just the guys that are looking at it from an opportunistic standpoint that don't have to meet shareholder demand.
Yeah. Tim, what about Houston?
Yeah, so Houston, we're seeing still a decent amount of activity on the home builder side. It's definitely slowed down a lot. But the right sites, like just took a large suburban site to market and got 8 offers that were really strong offers from all the top single family builders. We feel really good about that deal moving forward. We also have had kind of some, I wouldn't say like core infill sites, but infill, suburban, infill, almost true infill sites we're going to market with, and we're seeing activity on those. Houston's changed a lot from maybe 10 years ago. There was a time where we had a lot of infill townhome development, and that's really died. I mean, it's pretty tough here. So it's interesting to hear, Tripp, that you guys are seeing that really come back in Austin and be seeing a lot of growth there. It makes sense with how good your infill market is. But I think for Houston, we'll continue to see a lot of lot developers take down sites, or at least put them under contract. They typically get a year in to close anyway, or sometimes more than that. So they're not concerned as much about where home sales are today, or where the market is right now, but about where they think it's going the next 3 to 5 years. So I think we'll see a decent year for single family. We closed thousands of acres this year at Houston for single family, our best year ever by far. And so I don't know if it'll be that strong from a closing standpoint, but we'll still see some good activity.
Yeah, it's interesting on the townhomes, Tim. That was the biggest change when I moved to Dallas. I was like, why don't we really have townhomes here? Because I was so used to like Frank Liu building 5,000 townhomes a year in Houston, and like really nice developments that you're like, these are super cool. I would want to live there, just like really neat developments. And so we're similar to Tripp. Now it's kind of coming here, not at that scale, but whereas we weren't really seeing any, now that's what's starting to make more sense. And so single family is definitely the biggest change in 2025 of all the use types. I mean, going back and listening to what we said a year ago, comments like, I don't think that slows down. I don't think it changes in the foreseeable future. And that changed a lot. Like
Yeah.
it was so
Yeah.
hot, and it's hard. A lot of times when it's really hot, it's hard to, you just don't know, like, why would it slow down? But then when it's difficult, it's always hard to see it picking back up. And single family is an example of it just slowed down. Sales started slowing down, and there was a lot of activity. And to your point, the builders backed off. And so many of them are publicly backed. So saw a lot of deals fall out of contract. And then we saw a pullback into just the better, again, flight to quality, the better sites, a lot more urban. The deals we were working on that closed were more urban, finished lot, townhome, those type of developments. And so even though single family, I would say, was a difficult year, it was not difficult from the standpoint of, like you said, Tim, we actually closed a lot of single family deals. I mean, in Austin, in Houston, and Dallas, we closed a lot of single family deals. It's more the second half of the year, it started slowing down on the front end of offers and putting sites under contract. Still happening, just not as frothy as it was. But on the pricing side, one of the things I said, it was my prediction for 2025 on the single family side, was we had just set a record for the highest price paid for a finished lot deal here in Dallas on a deal that we closed like last December. And I said, I think we're actually going to see higher pricing on finished lot deals. And that actually happened. So now there's another deal that 25% higher, 25% higher.
Crazy.
But it's an incredible site. It like there's really high barriers to entry. There's not a ton of supply in that specific submarket. DFW now, there's kind of like 2 or 3 submarkets you really want to be in. And then to your point, Tripp, it's like other submarkets just don't make sense. They're just way oversupplied. Like there's some areas where the data would tell you like this might be oversupplied for the next 10 years, like that specific area. But then there's another area where it makes sense to go set a record and pay up whatever you need to pay. Because again, these builders need to build homes, need to sell homes. And so they've got to go find those areas. So single family is really interesting. I think we've really changed our strategy. And the good thing about the way all of our offices work is we just are so in tune with the builders and so in tune with the land developers and what they need and what's going to work for them. We're bringing out some really well-located urban single-family listings to start the year that are going to just, I mean, they're going to fly. I mean, one of them we're only taking to, I think, like 10 select groups because they're all going to be interested. They're all going to offer.
Yeah.
The other one will go a little bit more broad, but it's going to also have really high demand. So, I mean, those are a little harder to do at scale because they're urban and they're smaller deals.
Right.
But
yeah.
we're going to be working hard, in 26 to do a lot of those type of deals. Let's move into kind of our bold predictions as we close out this episode of storylines and predictions for 2026. What do you guys have as your bold predictions for your markets? Doesn't really have to be more than one thing. I'm just thinking something that may end up kind of defining the market for 2026.
I would say from a kind of a high level standpoint, I think that 2026 will be 2025 part 2 for Houston. I don't see anything that different happening. I see almost a repeat of 2025 where we see multifamily active. We see good deals getting done, good pricing on the right submarkets. We see continued industrial development and activity that's strong for the right sites. And single family will be probably the same as it was the last half of 25, where we saw activity, but in the right submarkets and builders careful about what they do and not just trying to buy everything that they could buy. I think from a specific standpoint, a prediction would be, I think we'll continue to see more infill deals happen. Late in 25, we started seeing some pretty good offers on infill sites, much higher pricing than we saw the last 3 years. Now, we didn't see those deals transact. We saw deals go under contract and we saw offers. We did see a number of infill transactions in 2025, which was really good, just not a great pricing. So I think we'll see some more growth in the number of offers in the infill market, the growth in interest, and some better price deals actually getting done, some real deals getting done, which we really didn't see in 25. So I think as far as a shift and a change, that might be where the change is.
Yeah, I think it'll be similar for us. Another repeat year from 25. I think people are still going to try and figure things out. There's still a lot of pain. There's still a lot of supply. Bold predictions, I think urban infill rents are going to grow. And I think we're going to see a lot more, even more flight to quality and higher density projects, mixed use projects. I mean, things that I think people want, good real estate deals get done. And I think the B and C sites are still going to have a lot of pain. Another bold prediction, I think we'll continue to see extreme interest in data center sites.
Yeah.
Still getting calls all the time, and we have no power. So I'm really interested to see how that works out. But I think we'll start to see rent growth. We finally bottomed out. Bold prediction is that we'll see rent growth, and I think equity is going to hop back on board, and I think multifamily is going to start ripping again. I think the smart groups really are going to want to build up a pipeline and tie up sites. And if we can start to get equity, it's a herd mentality. So I think as soon as one starts committing, I think all the other ones are going to jump in.
Yeah, we're fully aligned on that. We just closed on that site with Ascent in late December with Endeavor, and the goal is break ground beginning of 27. I think that's when you want to be breaking ground in Austin.
Super excited about that project. Yeah, I think timing's everything, and I think the time these guys to go and get projects and get them out of the ground and the time that it's going to take, you want to be timing them up yesterday in Austin.
Yeah. I would say for DFW, I think this is going to be the year of these deals that people have just been holding on to, that we talked about in part one of this episode. The developers that bought too high, bought extra land, a lot of different things, but 21 and 22, they've been holding it for 3 to 4 years. The landowners that, wanted to sell, but just keep waiting, thinking it's going to get better. The land investors that have debt on land that they keep extending. I think it catches up in 2026 across the board. I think you really start seeing movement, and we're already starting to see it. We're talking to pretty big developers that are like, we're selling our site in 2026. Like, we're taking it to market. Our business plan is it's off the books in 2026. And so we're doing those BOVs. In a lot of cases, we talked earlier about there's some where you're getting guys out, at a gain, par. And some of these, it's like where they're going to go out, it's going to be a pretty significant loss. Yeah. But they've realized like it's actually gotten worse year by year. Yep. It continues to get worse. And it's the juxtaposition of different urban markets. There's some urban markets where I really believe, like you guys, there's going to be deals, there's going to be rent growth, and there's others where they're just going the wrong direction.
Yeah.
We have some urban markets in DFW where there's crime and there's issues that are, very publicly known, and it's just taking those markets in the wrong direction. But those were like hot markets 3 years ago.
Right.
And I mean, you had groups paying $300 plus a square foot in those markets a couple of years ago. And so it's high-rise sites, it's podium sites, and it's like, now those markets are known as markets where there's too much crime to like want to do anything. And so I think that this is going to be the year where you start to see just a lot more movement on those deals. Some of them are going to be just foreclosed on because the owners aren't going to sell. But I think that's what we're really going to see. I was surprised we didn't see more of it in 25, but just with the way it played out, and Tim, with what you said about kind of 2025 part 2, that's not what the people in these positions can hear to be able to keep holding on. So,
yeah, that's right.
Well, guys, it's always enjoyable and fun to sit down with both of you. Tripp, it's really fun to have you here in person in the Dallas office.
It's my pleasure.
And I'm excited about 2026 because I think we're really well positioned for it. And I think we are going into it. I would say I'd probably rather be going into it feeling the way I do, where I'm feel better about just the way the year is going to play out, that it's going to be a good year, but it's going to be a year where it's more of the same. Than last year. I think we went in and, a little bit on the fumes of some of our clients, just like so fired up. And that's the roller coaster ride that we went through in the first quarter was a little bit frustrating, but that's just part of the business. So I'm excited about the year.
Me too.
Absolutely. I am too.
All right. Well, thank you for listening to the podcast. You can reach out to any of us. We'd love to hear from you. Tripp Rich, our partner in Austin, Tim in Houston, and I'm here in Dallas. So send us an email, reach out, visit our website. We'd love to hear from you, talk to you about your land. We are going to be bringing out a lot of really interesting sites early this year, all these different use types, but we've grown our teams, and so we have bandwidth to handle more. So we'd love to talk to you about your properties as well. Thanks for listening.
Thanks, guys.
Thanks, guys.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.